We've got an unexpected decline in GDP, unexpected by most people, not unexpected by you. Meanwhile, we've got the stock markets under a lot of pressure, as I told you they would be. The curtain is getting pulled back. And then what everybody else is saying, they're all saying that inflation is going so much higher. I'm telling you that now it's beginning to set up to start going lower. For many of you, this is your very first time here. My name is Peter Leeds, and I am the small stock specialist. You might ask yourself, why small stocks? Because they produce the biggest gains, if you know how to find them. And please understand that nothing in this video or anything we put out ever is intended as personalized trading advice for you. What I would ask you is, do you believe me now? Are you starting to see how this is all playing out, as I've been telling you for ages about how this is all lining up? The stock markets are looking horrible. I told the curtain to be pulled back. Look at this: Dow Jones Industrial Average, S&P 500, the NASDAQ, even some of these high-flying stocks like Tesla, many others. So my question becomes, are you starting to believe me now? The curtain's getting pulled back on this delusional market, and things are going to be going back to the ways that they should be, more realistic. And when it gets more realistic, that means there's a pain point for a lot of people. So many people are so overly leveraged. This is going to be a completely difficult time in the near future. And that's what I'd want to ask you. If you take a look at some of the things I've been saying for so long now, allow yourself 15 seconds, 30 seconds, just for that time. Really believe and feel that what I'm telling you is going to happen is going to happen. Just for one instance, what would you do if everything I'm telling you is going to happen plays out exactly like I'm telling you? We would be entering the greatest depression. It's going to last over a decade. So what do you do about it? Maybe I am right, and so therefore there's certain things you can do. I'll talk about a few of these in this video. And then we're going to talk about the surprise decline in GDP. The economy's been doing so horribly for so long. Well, you've got politicians, Federal Reserve representatives telling you that the economy is doing so well. There's a big difference between being told the economy is doing well and the economy actually doing well. There's a big difference. There's a void there. Some of the things you can do, what I've been doing, if you've been watching me, I've been getting out of blue chip stocks and all these high-flying speculative stocks for ages now. You got to get out of the way of that derailing train. And if you own shares in things like Tesla, Netflix way back here, and you still don't do anything about it, there's very little I could do to help you out at this point. I've been harping on this for a while now. You want to get into certain kinds of companies, such as the gold miners, because they're going to preserve their value over time compared to a lot of these other stocks that are more speculative. I'd also suggest that you stop listening to the politicians and the powers that be and stop believing in some of these false prophets. There's a lot of people out there. Everyone's got the technology now to tell you the way things are going to go. But someone talking on a camera is not the same as somebody who knows what they're talking about. Just look around at the person's situation and ask yourself if they maybe have a different way of looking at things that maybe is more beneficial in most cases. But here's the article from USA Today with information that you probably saw in a bunch of other articles too. GDP fell by 1.4% last quarter. They were expecting an increase of 1%. They got a decline of 1.4%. And then all you see now is all these articles talking about how, well, it doesn't mean we're in a recession yet. They talk about how this is an outlier or some of this information is just a temporary blip and is going to go back to normal. Don't worry, it's only a little gully. It's tempting to say the U.S. is inching toward a recession or it's already in one. At least that's the takeaway some economists had from Thursday's GDP report, which showed that the U.S. economy shrank at a seasonally adjusted annual rate of 1.4% in the first quarter of 2022. And you know the technical definition of recession is 2 quarters of declining growth, but that's kind of, I look at it like this. Say, for example, hyperinflation. You're going to buy a loaf of bread. It costs 49% more than the month before, so technically it's not hyperinflation. It doesn't matter. This isn't what you should be looking at. You should be looking at the fact that there's dramatic inflation. So with the GDP declining. You say, oh, we might be in a recession if we get another 3 months. The point is, the economy, which has always been weak, and I've been telling you that even when everybody on the media is telling you it's so strong, the economy is declining. And maybe we'll get back on track after this one negative report. But generally, the trend for everything will be lower and lower and lower economic growth, not just in America, but worldwide. But here's the part I really want to get to. It's about inflation getting set to start coming down now, as I've been telling you, even when everybody was calling for higher inflation. There's some people out there saying, yeah, buy Bitcoin at 70,000. It's going much higher. Inflation's going much higher. Oil prices are going much higher. My premise is the exact opposite of a lot of that. I think we're going to be tumbling down into whatever we're about to face. And it's going to be pretty ugly. And talking about a lot of the stuff that you can do about it, this is what we focus on in the peterleeds.com newsletter. So if you want to get a leg up in that sense, this is one way to do it. But the article goes on to say, and this is from Reuters, U.S. Federal Reserve policymakers look set to deliver a series of aggressive interest rate hikes at least until the summer to deal with hot inflation and surging labor costs, even as two reports Friday showed tentative signs both may be cresting. I love when people catch up to what I've been telling you for months and months. And keep in mind that we're going to have a 50% probably interest rate hike this week. I think it's on Wednesday. Sharply higher food and gas prices lifted overall inflation to a new 40-year high of 6.6% in March, data from the Commerce Department showed. At more than triple the Fed's target, hot inflation is why the central bank is widely expected to ramp up the pace of rate hikes with a half-point increase at each of its next 3 meetings and continue raising rates through the end of the year. And with each interest rate increase, the servicing costs on all debts, government debts, how much you pay on your auto loan, it all increases. Unless you have a fixed rate on your mortgage, it increases. And so if you haven't seen my debt bomb video, then shame on you, but every slight interest rate increase costs the government billions and billions of dollars more just to pay the carrying costs on the debts we have. The debts cannot be defaulted on without hurting a lot of American citizens because most of the debt is owed to pensioners. There's unfunded liabilities. The government admits that we do not have this money. So I ask you, go down the rabbit hole a bit, go a little bit further down the road. What do you think happens? What do you think happens when it's time to get your money and they say the money's not there? Do you fill out some paperwork and wait a few months and then they find the money and give it to you? That's not very likely. It's going to be a very difficult time in this sense. But don't do the thing where everybody just panics and they stick their money under the mattress. There's a lot of opportunity because there's so much going on. There's so many changes. There's never been a stock market setup like this one ever. This is the way a currency goes through its last days. The inflation measure tracked most closely by the central bank as a signal of underlying price pressures, known as the Core Personal Consumption Expenditures Index, slowed slightly to 5.2% in March from 5.3% the prior month. The report from the Commerce Department also contained fresh evidence of a shift toward spending on services that Fed policymakers hope will also ease upward price pressure as spending on durable goods declined. My premise is that the stock market, the real estate market, the cryptocurrency market are all going to be under tremendous pressure. No one's going to have any kind of wealth effect. No one's going to feel like they have a lot of extra money to spend. That's why you're seeing economic contraction across the board right now. And I'm telling you, as a business owner, things have slowed down, even the number of views you get on a YouTube video. And speaking of which, these videos that I make deserve way more views than they get. So that's your opportunity. You are learning the right way things are going. Everybody else is basing the fact that we've had a 14-year recession-free bull market as they know what they're talking about. And a lot of people are following them. People are going to go off the cliff. And when I talk about inflation, I'm not talking about the expansion of the monetary supply. I'm talking about price pressures that matter to you. Meanwhile, a separate report showed employers jacked up benefits to attract historically scarce workers, accelerating the pace of employment cost increases to 4.5% and underscoring the Fed's view that the labor market is extremely and perhaps unhealthily tight. Again, what I'm saying about, especially as an employer, you don't want a low unemployment rate. You have to pay more to retain the talent you have. You have to pay more to attract new talent. This is a second kick in the gut for any business in the middle of a recession, which we'll have sooner than anybody else is telling you. The reports won't stop the Fed from hiking by 50 basis points next week, but it supports our view that inflation will fall a little more quickly this year than Fed officials now appear to expect, said Andrew Hunter, senior U.S. economist at Capital Economics. So you see, you're being told one thing by the politicians, you're being told one thing by YouTubers. You're being told the wrong information. And then you look around and you say, I've been around for 3 decades now, doing this only. I started my business in university, and I'm a lot older than I look. And I had a wake-up call the other day. I put out that video about I'm giving away a gold coin for the gold coin contest, and I don't know if people think that's showy or something. Not a lot of people watch that video. So if you take the prize amount, how much prizes were given out for the Peter Leeds gold coin contest, this next gold coin contest, you just take a picture. Have a picture you already have. You take one with your phone. You enter it into the contest. Every person in the contest, on average, will be making about $4 just by sending in a picture. And so people are bemoaning that things are costing so much. There's not a lot of good opportunities for people now to get a leg up. I'm handing you one. No one's taking advantage of it. I'm basically putting this out here. You know what? It's fine. If only 1 or 2 people enter, then great. You get some awesome prizes for doing barely anything. I'm taking a loss on this, and I can't give it away. People aren't even watching the video. But all this aside, what you want to do is make sure you land on your feet and you make the right decisions. A lot of what we do, even in the Peter Leeds newsletter, someone will ask me a question, and I'll reply to that. Stephanie will take that out and put it into the newsletter, and we'll use it that way so that if you're subscribed to the newsletter, you're seeing all of the best responses I gave to people's questions. That's an added benefit. If you want to have economic understanding so that you land in the best place possible and you come through the other side of this in a lot better shape than you otherwise would have.
I paid $45 for 30,000 shares. The stock just really took off. The overall value was many times the initial investment. I would suggest this for an investor at any level.